Hello everyone, welcome back to the This Time YouTube. This is Stock Market Weekly Update. It was a historic week for the Colombo Stock Exchange as the all-share price index crossed the 22,500 mark for the first time in its history. The SPI closed at an all-time high of 22,634 points, gaining 315 points, a 1.4% increase compared to last week. The S&P SL20 also moved higher, adding 37 points to close at 6,263. On the foreign investors front, activity remained strong. However, yet another week, foreign sales outpaced purchases, resulting in a net outflow. Purchases totaled around 1.3 billion rupees, while the sales stood higher at 4.4 billion, leaving a net outflow of 3.1 billion rupees for the week. Investor sentiment continued to stay upbeat, driven by robust corporate earnings, steady economic growth momentum, stable interest rate, and ongoing reform that are boosting market efficiency and confidence. Let's take a look at CSE's performance against regional peers. According to Bloomberg report, Sri Lanka traded at roughly a 33% discount compared to its regional frontier and emerging market peers. The CSE's SPI year-to-date return now ranked as the third highest among the region's emerging markets. With expected economic recovery and greater political clarity, investor confidence is likely to strengthen further, potentially driving SPI to new heights and keeping Sri Lanka's market among the standout performers in the region. Sri Lanka's construction sector purchasing managers index rose 61.1 in August 2025, up from 60 in July, indicating a continuous expansion in construction activity. The growth was driven by a steady increase in project availability with significant contribution from road development projects and private sector initiatives, which pushed the new orders index higher. The quantity of purchases index also expanded further, reflecting stronger demand for construction materials and imports. Meanwhile, the employment index moved up from neutral level, signaling improving labor conditions in the sector. On the other hand, the suppliers' delivery time index remained expanded, suggesting ongoing supply side pressure despite sector's robust momentum. Looking ahead, industry sentiment remained optimistic, supported by expectations of increased government-led projects in the pipeline. With the construction activity continuing at accelerated pace, this positive momentum is expected to benefit listed companies in the construction, capital goods, and telecommunication sectors as they capitalize on heightened project activity and a steady flow of new opportunities, leading stronger financial performance going forward. In this episode, we turn our attention to a leading player in Sri Lanka's telecommunication sector, Sri Lanka Telecom, a prominent company listed on the Colombo Stock Exchange. Sri Lanka Telecom stands as the nation's premier ICT solution provider, offering a comprehensive range of services that includes fixed and mobile communications, high-speed broadband, cloud and data center solutions, and enterprise ICT services. With a strong emphasis on innovation and digital transformation, SLT continues to drive the country's connectivity, digital inclusion, empowering both individuals and businesses to thrive in an increasingly connected world. The SLT group structure comprises 5 main companies, 2 subsidiaries and 1 associate company, while remaining entities are currently dormant. Let's take a closer look at the financial performance of Sri Lanka Telecom PLC. Over the past 5 years, revenue has shown steady growth except for a slight dip in 2024. However, the company rebounded strongly in 2025, recording a 5% year-on-year increase in revenue. Net profit surged by an impressive 179% in 2025, largely supported by a reduction in finance cost. Earnings per share followed the similar trajectory, posting a remarkable 180% growth compared to 2024. Meanwhile, return on equity has shown some fluctuation over the past 5 years, ranging between 3% and 13%. Notably, in 2025, SLT achieved a positive return of 3% to equity holders, making meaningful turnaround. As of the first half of the current year, EPS stand at ₹2.37. For our forecast, we have taken a conservative approach, assuming the second half will deliver at least 10% additional growth over the first half earnings. Considering ongoing recovery in multiple sectors that supported telecommunication industry, this projects a full year forecasted EPS around ₹4.98. Currently, the telecommunication sector trades at an average earning multiple of 14 times, while Sri Lanka Telecom PLC trade at a slightly higher multiple of 17 times. Investor sentiment towards technology-driven companies remains strong. Given their rapid growth trajectory, assuming SLT remain its current PE multiple of 17 times, the implied year-end price target would be in the range of 80 to 90 rupees, representing an upside potential of approximately 16% from current levels. The net asset price per share stand at 53 rupees, reflecting an 8% year-on-year increase. The company's price to book value has improved to 1.38 times, signaling further potential for price appreciation as the market re-rate stock in line with stronger fundamentals. The stock is currently trading at 72 rupees 80 cents with the key support level identified around 65 rupees. The RSI is hovering near 72, indicating that stock is moving towards overbought territory. Recent trading pattern shows the resistance near current price level with the formation of red candles suggesting the potential for short-term consolidation phase. However, if buying interest strengthen around the current level, effectively turning it into a support zone, stock could resume its upward momentum towards resistance band of 78 to 80 rupees. On the downside, a decisive break below 64 rupees could trigger a deeper pullback, signaling a short-term correction. From a broader perspective, Sri Lanka Telecom PLC continued to present a compelling investment opportunity supported by strong earning visibility, attractive valuations, and positive growth momentum in the telecommunication and capital goods sectors. We would love to hear your thoughts. Please comment below. Remember, always invest carefully and do your own research. That's it from this time for today. If you found value in this analysis, hit like, subscribe, and stay tuned for more market updates and insights. Thank you for watching. See you in the next one.